I own a home, I've got a low interest rate, but I want to buy this next home. But there's higher rates. What do I do? We're going to talk about the MoveUp Dilemma next. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. Today, we're going to talk about the MoveUp Dilemma. What I mean by that is there are a ton of homeowners out there. I was talking to one just last night, sitting there going, I'm on a really low interest rate, but I'd love to move, but these higher interest rates are what is holding me back. I said, have you done the math? Have we looked at the actual math of where your net worth would be of buying that next home versus sitting on that lower interest rate? So we're going to dive into those details. I promise you don't have to do math, so stick with me, right? So before we jump into that scenario, hit that like button, hit that subscribe, and then click that bell icon to be notified. Putting out weekly videos on the channel. I've got over 100 videos in the Mortgage Minute playlist. So please click that subscribe. It's absolutely free. Over 85% of you are not subscribed. Now, we're going to give a quick update on interest rates. Again, while you're down there, the average 30-year fix according to Freddie Mac is linked down there below, and I'll put you right up here. We have seen rates tick up slightly over the last few weeks, but overall, we've been pretty flat for about a 4 to 5 week period. With that said, we have volatility in the middle of it, right? So now let's talk about this MoveUp Dilemma. So in this case, and I'm going to move over and put up on my screen here, right? So I'm going to show you a scenario of a homeowner, say in 2017, 2018, 5 years ago roughly is what I'm trying to give you, that bought a home. That home is appreciated, right? So let's, in this case, a homeowner bought a home for say 600. It's worth maybe 750 now. They've got a very low interest rate. To use easy math, I'm using 3%. As an interest rate. So that monthly mortgage payment would be roughly $2,000. Now I am using an example here. So all you, math and data junkies, I am going to say, hey, since my payment is super low, I'm investing $1,000 into an online savings account earning 3%. So I am trying to give you the absolute reality here of what this would look like. Hey, I've got a low payment. I can put some money aside, but if I go up in payment, I probably can't do that. So what is that reality? What does that look like, right? So again, I'm going to take you back on the screen here, and I'm going to show you a payment breakdown where I show you that $1,000 down here that brings you to roughly $3,000 in total. So I am taking that into consideration. Now, when we look at it, I've got now, hey, I want to move up and buy $1 million home, right? I bought a 600, it's now worth 750. I want to buy $1 million home. Now, I want to take the money from the current home, put it into the new home. What would that payment look like in this higher interest rate environment? And now in this case, again, I'll come back over. We've got just over $4,000, just under $4,200. And you look at it and go, hey, I'm at $2,000. I'm going up to $4,200. That's just, how on earth is that in my benefit? And to be honest, you have to look at the bigger picture. Are you getting the extra bedroom? Are you getting the full updated kitchen? Are you getting the bigger backyard or the larger lot size, right? If you're thinking about moving, there must be a reason your current home, it's not going to be fixed by sitting on a low interest rate, right? So I'm not suggesting to leave it, but I am suggesting is looking at the math, talking to someone, talk to a loan officer, talk to a financial advisor, talk to somebody that you trust that can kind of run the numbers with you. Now, in this case, and I'll bring it back onto the screen here, let's look at your net worth in 15 years. And the way I'm looking at this is that assuming that properties are appreciating single digits, 4 to 5%, we've seen 10, 12, 15% at times. But let's assume that, properties appreciate at 5%. Let's assume I'm putting in, again, if I'm sitting on my current home, now that I'm just kind of putting money into an online savings account at say like 3%. So I'm trying to use a very conservative but very fair representation of market returns now. Now, in this case, you can see my net worth in 15 years is exactly the same. And that's assuming, again, that the bigger home, as it appreciates, is going to give you a bigger return. Now, the money that you're saving over here, you're putting kind of back into an online savings and, putting money aside. But when you look at the overall view, if you can get that new home, right? That with that extra bedroom or 2 extra bedrooms or larger lot size, or like I said, a new kitchen, or it solves some of your family issues, maybe the home office or the gym or the this or the that, whatever it may be. In this case, now again, I'm using these numbers around the North Shore of Chicago, because that is the reality up here that people are looking at. Now, this might not be a reality for, I grew up in Indiana, like this would be a ridiculous representation of numbers, but as you run the numbers, they're still basically the same net worth in a 10 to 15 year period if you're going up in home and you see that property appreciating. And that's the point I want to make, is that appreciation is key, and it's nowhere in the math unless you look at the full circle of the scenario, right? So if you can have the same net worth in 15 years, what is holding you back? And again, in a low inventory market right now, there's a ton of people in this move-up dilemma. Now, my suggestion to you is this isn't going to work out in your benefit every single time. Is it going to work out where it's like the numbers are very, very similar? No. But you need to run the numbers with somebody. Don't just assume sitting on a 3% interest rate is going to be in your best benefit than maybe going up in home or seeing where interest rates are at. If rates move down into the fives, let's say the average 30-year fix moves into the fives, now all of a sudden your net worth in that larger home will likely be more than where you're at on that current home. So something to consider. Put your comments below. What do you think? Do you want to sit on that interest rate? Do you have you thought about the total net worth or putting money aside and how appreciation might do it? I'd love to hear your thoughts on where housing prices are going to go. If my math is off, if my math is on, I want to hear from you below. So if you haven't clicked that subscribe, please do so. Stay safe, and we'll see each other again very, very soon.